name is Hombu. Thank you for taking the time off your busy schedules to attend today's earnings briefing. To all of you gathered here, shareholders, institutional investors, analysts, financial institutions, and stakeholders, I would like to thank you all for your continued support and loyalty. I shall be providing a brief outline of the company's earnings results for the first quarter, followed by a progress analysis vis-à-vis our projected results for the full fiscal year ending in March 2019. I shall then yield the floor to Director Yamanaka, who will provide current initiatives. This shall be followed by a Q&A session lasting until 11 o'clock. Without further ado, I would like to introduce today's panel. Director and General Manager of the General Accounting Department, Mr. Taiji Hitachi, and Director and General Manager of Public Relations and Investor Relations Division, Corporate Planning Department, Takehito Yamanaka. Today's conference will be made available in webcast format, for which we request your understanding and cooperation. Please first peruse the disclaimer on page 1 carefully. Without further ado, let us start today's earnings briefing. First, I would like to announce a change in nomenclature for the various business segments that comprise J-Trust. The segment previously known as the Domestic Financial Business is now the Financial Business in Japan, while the segment termed Financial Business in South Korea has been renamed Financial Business in South Korea and Mongolia to reflect the company's expansion into the Mongolian market. In terms of earnings, we registered 900 million yen in operating profit for the financial business in Japan, while the financial business in South Korea and Mongolia too performed well to deliver 1.4 billion yen during the first quarter. The financial business in Southeast Asia, on the other hand, suffered an operating loss of 700 million yen. Consolidated earnings before tax stood at 1.7 billion yen for the company as a whole. Please turn to page 7. The company suffered a contraction in operating profit despite higher revenue YoY. The metric of operating profit stood at 500 million yen on account of the underperformance of the Southeast Asian segment. However, foreign exchange gains associated with J-Trust Asia based in Singapore allowed the company to deliver 1.7 billion yen in earnings before tax. Profit attributable to owners of parent stood at 1.4 billion yen, which constitutes 26% of our goal of 5.3 billion yen for the fiscal year ending in March 2019. Please turn to the next slide, which provides a YoY comparison for the metric of operating revenue by business segment. The financial business in Japan, as well as in South Korea and Mongolia, were the main drivers for growth during the first quarter, leading to higher consolidated operating revenues YoY. The slide on page 9 shows the same comparison for the metric of operating income. Here, too, the financial business in Japan and in South Korea and Mongolia were the main drivers for Q1, allowing the company to remain firmly in the black. I would now like to use this opportunity to go over each segment individually. We registered 2.3 billion yen in operating revenue for the financial business in Japan, which translated into 900 million yen in operating profit, with stable performance. We expanded our credit guarantee balance, which stood at 159.7 billion yen at the end of June, mostly on account of the increased guarantee of condominium loans. As I'm sure you're aware, and as I've mentioned in previous presentations, we only deal with trustworthy agencies and only offer credit guarantee for properties in prime locations. As of June 2018, we guaranteed 1,552 properties and boasted occupancy rates in excess of 98% with zero defaults. Nihon Hosho also offers the use of guarantee for overseas real estate secured loans and reverse mortgage guarantee solutions. Guarantee for overseas real estate secured loans has started in Hawaii, Texas, Nevada, and starting in July in California as well. We've also started a partnership with the Keikyu Corporation and Shonan Shinkin Bank as a way of expanding our presence in the reverse mortgage guarantee market. Similarly, we continued adding to our servicer portfolio while collecting on the off-balance sheet loan portfolio we inherited from Takefuji. Please turn to slide 16. We had projected 9.9 billion yen in operating revenue for the fiscal year ending in March 2019 for the financial business in Japan. As of the end of the first quarter, we had realized 2.3 billion yen in operating revenue, or 23% of the amount forecast. For the metric of operating profit, we realized 900 million yen, which corresponds to 20% of our goal of 4.5 billion yen for the same period. We intend to further expand our credit guarantee loan portfolio during and beyond the second quarter. Furthermore, we expect to see improvement in collection rates for the servicer business during the second quarter and beyond. So we expect to see a larger earnings concentration in the second half of the year than in usual fiscal years. All in all, performance was in line with company expectations. Next, I would like to provide a brief outline of the financial business in South Korea and Mongolia. Capital Continent Investments, or CCI, which offers auto loans in Mongolia, became part of the J-Trust Group during the first quarter, leading us to rename the South Korean segment to reflect this fact. Only CCI's balance sheet is reflected in our results for the first quarter, after which we'll be adding its profit loss statement to the group's consolidated earnings report for the second quarter. We registered 10.1 billion yen in operating revenue for the financial business in South Korea and Mongolia, which ultimately translated into 1.4 billion yen in operating profit. We are pleased with these results. Let us now dig a little bit deeper. The graph on slide number 19 contains a graphical representation of the combined loan balance at our two savings banks in South Korea and at JT Capital, with delinquency rates in orange. Despite a tightening of regulatory standards by the South Korean government, we were able to expand our loan balance while at the same time keeping delinquencies low. We are in the process of shifting the composition of our loan portfolio to focus on corporate loans, which are less vulnerable to regulatory tightening. Please turn to slide 21. Net interest income stood steady despite a decline in average lending interest rates due to a reduction in the interest rate ceiling. I would now like to move on to the servicer business. We continued adding to our receivables balance. Moving forward, we intend to continue expanding the purchase of receivables while at the same time remaining discerning in our selection of which assets to buy. We realized 10.1 billion yen in operating revenue during the first quarter, or 27% of our goal of 37.9 billion yen for the fiscal year ending in March 2019. We posted especially strong results for the metric of operating profit, which stood at 1.4 billion yen during the first quarter, or 58% of our target of 2.4 billion yen for fiscal year 2019. Next, I would like to provide a brief outline of the financial business in Southeast Asia. We registered 3.1 billion yen in operating revenue, which ultimately translated into an operating loss of 700 million yen. As you can see the progress at the website of J-Trust Bank Indonesia, our loan balance grew steadily during the first quarter. 53% of our current loan balance was obtained under the new management. Moving forward, we intend to continue expanding and optimizing the composition of our loan portfolio for the financial business in Southeast Asia. The following slide provides an outline of our operations at J-Trust Bank Indonesia. The average interest rate paid on deposits went down during the first quarter. However, and due to the adverse effects of the restructuring of non-performing loans, as well as the introduction of the IFRS 9 accounting standard during the first quarter, we suffered a slight contraction in loan interest rates and net interest income as a whole. The following is a summary of the issues facing J-Trust Bank Indonesia and a series of countermeasures. We intend to continue adding to our loan balance by leveraging our resources at Olimpindo, a multi-finance services company in Indonesia, after its inclusion in the group's consolidated results in the second half of the year. Furthermore, we've hired more personnel in the credit administration department to more effectively process credit applications from customers. Finally, we've set up a dedicated team and appointed outside experts to minimize delinquencies and loan non-performance. Please turn to page 29. We registered 3.1 billion yen in operating revenue during the first quarter, or 16% of our 19.2 billion yen target for fiscal year 2019. Additionally, we posted an operating loss of 700 million yen during the first quarter, leaving us 3.3 billion yen away from our full-year forecast of 2.6 billion yen. Despite these setbacks, we intend to implement the strategies I just outlined in an effort to meet our target for fiscal year 2019. Next, I would like to go over our results for the investment business. We incurred no further derivative losses after the third quarter of last year, due to the recategorization of J-Trust's position in GL convertible bonds as monetary claims. We accomplished 200 million yen for the metric of operating revenue, or 17% of our target of 1.2 billion yen. Similarly, we registered 100 million yen for the metric of operating profit, or 20% of our goal of 500 million yen. Lastly, I would like to provide you with an overview of the non-financial business. As previously disclosed, we sold our stake in the Adors chain of amusement arcade venues towards the end of last year. As a result of this, the operation of Adors business for the fiscal year which ended in March 2018 has been translated to the operation as discontinued operations for the purpose of obtaining a representative YOY comparison. Overall, we registered 1.6 billion yen in operating revenue during the first quarter, or 12% of our target of 13.3 billion yen for the fiscal year ending in March 2019 as a whole. We ultimately posted an operating loss of 200 million yen during the first quarter, leaving us 600 million yen away from our target for fiscal year 2019. The J-Trust Group as a whole registered 17.8 billion yen in operating revenue, or 21% of our target of 83.3 billion yen for the fiscal year ending in March 2019. This figure stood at 500 million yen for the metric of operating profit, which corresponds to 7% of our target of 7 billion yen for the same period. Finally, Profit attributable to the owners of parent stood at 1.4 billion yen. That is to say, 26% of our full-year forecast of 5.3 billion yen. The financial business in Japan and the financial business in South Korea both delivered a strong performance. We expect to be able to turn things around in the Southeast Asia segment through the inclusion of Olimpindo in the company's consolidated results starting with the second quarter. This concludes my presentation. Thank you for listening. I would now like to yield the floor to Mr. Yamanaka, who will be providing an outline of J-Trust Group's current operational situation. My name is Yamanaka. Thank you all for taking the time off your busy schedules to attend today's earnings briefing. I would like to use this opportunity to provide you with an overview of our operations at J-Trust Group recently. I would like to touch upon the following 5 points in today's presentation. Number 1. Following the sale of the company's stake in Adors, we continue to see a shift towards the preponderance of financial services. When looking at the composition of the South Korea, Indonesian, and the Cambodia business, which we expect to figure in the company's consolidated earnings statement starting next year, we expect to continue seeing a structural shift towards financial services geared towards SMEs and retail banking. Number 2. The credit guarantee and servicer business constitute the bread and butter of the financial business in Japan. Within the former, condominium loans make the bulk of our portfolio. Through strict risk management, we have been able to avoid defaults. Moving forward, we intend to pursue a diversification policy towards the further reduction of risk. Number 3. We continue delivering steady, sustainable growth in the South Korean segment, despite stricter regulatory oversight. Number 4. J-Trust Bank Indonesia is the centerpiece of the financial business in Southeast Asia and holds the key to future growth and expansion. We are currently in the process of restructuring our bank in Indonesia. We intend to continue expanding our loan balance while optimizing our loan portfolio composition in an effort to improve profitability. Number 5. I shall be going over number 5 on this list at a later point in this presentation. The credit guarantee business, with a focus on condominium loans, and the servicer business, involving the purchase and collection of receivables, constitute the bread and butter of the financial business in Japan. Regarding the latter, we derive most of our profits from the collection on credit card and cash advance receivables, as well as through collection on the fully write-off loan portfolio we inherited from Takefuji. Partner Services' quarterly volatility is smoothed out on a yearly time frame. Low operating profitability at Partner is due to a loan participation agreement and collection contract with Nihon Hosho, of which Partner is a subsidiary. The guarantee of condominium loans constitutes our bread and butter at Nihon Hosho. A shared house loan scandal which happened in the banking industry has been in the news lately, generating many questions from our investors. Nihon Hosho loan guarantee origination expanded at a healthy clip and was 16.3 billion yen, or 36.7% growth YOY during the first quarter. Data from the BOJ and the Japanese Bankers Association suggests a slowdown in the expansion of condominium loan balances for banks. Despite this, J-Trust Group continues to expand its guarantee balance at a healthy pace. Of course, there's a slight time lag between guarantee approval and the actual origination of those guarantees. The following slide pertains to the geographical distribution of our condominium loan portfolio, with special emphasis on the Tokyo metropolitan area. J-Trust Group continues to carry out a risk management strategy involving a strict selection process leading to higher occupancy rates. We intend to continue focusing on newly built and conveniently located properties in Tokyo, Osaka, Nagoya, and Fukuoka in an effort to maintain high-quality lending standards. We entered the condominium loan guarantee business in April of 2014 and have had 0 defaults as of the end of the first quarter of fiscal year 2019. Maintaining such high guarantee standards has its toll on growth. As a result, and moving forward, we intend to continue diversifying into other products, including mortgage loans and overseas properties and reverse mortgage product solutions. The following is a breakdown of operating assets at Nihon Hosho for the first quarter, including off-balance sheet assets. Also included here is the average yield on loan assets. Next, I would like to provide an overview of the servicer business. According to data from the Ministry of Justice, the servicer business is currently undergoing a slowdown. However, the market for retail loans continues to expand. J-Trust Group focuses primarily on retail loans in the form of credit card and cash advance receivables. Increasingly, we acquire these loans from independent card companies not affiliated with any of the big banks and which do not have servicer subsidiaries. These types of companies have higher growth than the industry average, and we enjoy high growth of our business. The following graph compares and contrasts the overall shopping and cash advance transaction volume at credit card companies not affiliated with the big banks, and the bank loan portfolio for card loans. It is our belief banks will not sustain their current level of growth due to regulatory issues. Moving forward, we anticipate a possible influx of NPLs into the secondary market, presenting an opportunity for J-Trust. I would now like to provide an outline of the financial business in South Korea. The South Korean government continues to implement tighter regulation at a pace and to a degree in excess of our initial expectations. In response to this regulatory tightening on the part of the South Korean government, and as Mr. Hombu explained, we are in the process of shifting our portfolio composition towards the lesser regulated market for corporate lending solutions. J-Trust Group currently owns and operates 2 savings banks alongside JT Capital and Servicer for a total of 4 financial service providers in South Korea. The diagram on slide 48 allows us to compare J-Trust Group Korea's positioning relative to other savings banks for the metric of absolute assets, ROA, and net profits as of the end of December 2017. The vertical axis represents the respective ROA for each institution in percentage terms, while the horizontal axis represents absolute net profits. Each sphere has an area proportional to total assets. J-Trust continues to expand its loan portfolio while keeping loan delinquencies low. However, we suffer the setback in terms of ROA due to the proactive sale of NPLs, leading to a spike in credit costs. We booked profits associated with the sale of receivables, allowing us to improve the ROA for our 2 savings banks to 1.42% during the first quarter. In other words, we are on the right track towards improving our positioning in this industry. Rather than focus on tightly regulated markets, such as the market for unsecured loans, we would rather direct our energy towards expanding our presence in the market for corporate loans, which is less strictly regulated. Next, I would like to discuss the financial business in Southeast Asia. This graph provides a visual representation of J-Trust Indonesia's loan balance over time. We're currently in the process of optimizing and expanding our loan portfolio composition in an effort to increase productivity. In concrete terms, we intend to reduce the relative importance of corporate loans to large corporations, to focus more on the market for SME loans, retail loans, multi-finance loans for individuals, and finally wholesale loans for non-bank financial institutions. The following is a positioning diagram, this time for the Indonesian banking market. Our plan for expansion moving forward is to leverage our resources at Olimpindo, which is scheduled to become a consolidated subsidiary on August 30th, 2018. We also intend to make use of strategic partnerships with fintech companies in Indonesia and expand into regional markets. Our strategy involves a little bit of manageable risk-taking and consists of expanding into markets where there is little competition from established banks and financial institutions. Our revamped core banking system is now almost fully operational, allowing us to offer internet banking services to our customers. Attracting customer deposits allows us to lower our CASA ratio, which in turn leads to lower funding costs. J-Trust Bank is still a relatively small player in the Indonesian market. However, we intend to distinguish ourselves from other banks in the industry through a clever marketing strategy, allowing us to expand total assets and profitability. I know many of you are worried about the impact of continued interest rate hikes by the Federal Reserve in the United States. But as it stands, we're currently in the process of restructuring our bank in Indonesia. As such, and given our current low profitability margin, for better or for worse, we're currently more focused on the process of restructuring J-Trust Bank Indonesia than we are preoccupied with macroeconomic trends. One caveat, however, is the exchange rate. The Japanese yen has appreciated almost 10% against the Indonesian rupee, negatively impacting foreign currency adjusted earnings for J-Trust Bank Indonesia. Please turn to slide 51. The following is a positioning graph for Olimpindo, a multi-finance NBFI in Indonesia, which is scheduled to become a consolidated subsidiary of J-Trust Group on August 30th of this year, and in which we own a 60% stake. Olimpindo provides auto loans for used vehicles as well as for farming equipment. However, the credit risk of the multi-finance industry has become increasingly tough in recent years, making it difficult to raise capital. We intend to make it easier for Olimpindo to secure funding through a partnership with J-Trust Bank Indonesia, allowing it to live to its full potential. Olimpindo is fast in reviewing loan applications and is trusted by dealers and partners throughout Indonesia. Next, I would like to discuss our future operations in Cambodia. As previously announced, J-Trust is expected to acquire a 55% stake in the ANZ Royal Bank Cambodia. This forms a departure from our strategy of acquiring and then restructuring distressed financial institutions. ANZ Royal is a highly profitable operation, currently ranked as one of the top 5 most profitable banks in Indonesia. We expect to further be able to improve profitability at ANZ Royal, but at the same time, we expect a direct positive contribution to J-Trust's consolidated earnings from the get-go. As its name implies, it was originally a joint venture between the Australia and New Zealand Banking Group and the Royal Group from Cambodia. The ANZ Banking Group is currently in the process of withdrawing from several Asian countries as part of a strategy towards the concentration and better application of resources. ANZ Royal's strategy focused on the acquisition of quality assets and boasted a very high ROA. However, and due to its conservative approach, it has historically maintained a low lending deposit rate. The loans it has historically authorized to are geared towards AA and AAA rated prime corporations, meaning it lagged in terms of loan balance expansion compared to other players in the industry. This means taking a less conservative approach, but by leveraging the Royal Group's partnerships in Cambodia, J-Trust will be able to expand the bank's loan balance and improve yield and growth. Moving forward, we're considering expanding into Laos and Myanmar. Lastly, I would like to outline the company's capital strategy. Currently, our dividend payout policy remains stable at 12 yen per share, which consists of an interim dividend of 6 yen and a year-end dividend of 6 yen. The company is open to revise this payout policy when the company improves profitability. Furthermore, in following the distribution of shareholder incentives last year, we have decided to continue this, a decision which has allowed us to capture a larger and more diverse shareholder base. This concludes my presentation. Thank you for listening.